Hello everyone, Kent with Zuna. I'm going to go through some charts here, and what we'll do is take a look at several continuous days of price action and what the market internals did and how they helped us with gauging price action, gauging directional bias, and choosing trades. Before I do that, I would like to talk a little bit about market internals because some are new to market internals and they need to understand what they are first. Market internals are essentially a are essentially a set of indicators that are calculated by the exchange, and that information is sent to your data provider, and your data provider obviously makes it available to you. Now, most are not familiar with what market internals are, therefore they don't even know how to load the market internal symbol into a chart. They're not indicators like a stochastic or a moving average, which you would just overlay into your price chart on a, for example, on your instrument like the E-mini ES. They're actual symbols that you're going to load into a chart. Okay, some of the popular ones are, for example, the NYSE tick, cash sign in TradeStation. It's cash sign TICK, put call ratio, trend, etc. These are some of the popular ones. Let me show you how many uh, market internal indicators are actually available, and you can have a good idea. And we list all of these in this document that comes with the market internal report. And as you can see, this is one page. Here's another page. There's approximately 25 symbols on each page. Okay, and we just went through about three. There's about 3.5 pages. So you can get a good idea of all the market internals that are available to you. And you can think of these as indicators, and they're all provided to you through your data provider. And it's just sitting there. It's a matter of, and if you trade the index futures, or if you trade the index ETFs, or if you trade individual stocks and you're not using these to gain valuable information, it's just a big waste. And that's essentially what this report is all about. We want to teach traders how to use the market internals. And when I say teach traders market internals, I'm not referring to, if those of you that are a little bit familiar with market internals, I'm not referring to pulling up a chart of the NYSE tick and putting a line at plus 1,000 and a line at minus 1,000, and then saying, oh, we got a minus 1,000, we need to fade the first one, and oh, we got the second one, okay, the second one we're not going to fade, the fifth one we will fade, but the eighth one we will not. It's nothing silly like that. Okay, we we actually give you information that has substance and that you can use to derive at a conclusion. And what we want to basically, we want you to get to a point where you can see two things. First, what is the directional bias of the market? By that we mean who's in control, the buyers or the sellers. Once you have that, then you trade in that direction. Obviously, that's that's a, that's basically one of the most important pieces of information for any instrument that you trade. Once you can get the directional bias, then you trade in that directional. Then you trade with that directional bias. The second piece of information you want to extract from market internal indicators are we're gonna teach you levels to watch, certain levels to watch, and you're going to take trades from those levels. Again, I'm not referring to NYSE tick levels because we do use the NYSE tick, but it's probably about 1/5 or 1/6 of the information we use from market internal. So we use NYSE tick very limited. We're going to give you levels that you will see. These levels will cause significant or major swing points in the market. Okay, significant swing points are something like this swing point where the market puts the low of the day in and then rallies, or the market puts a swing point like this in and drops. We're going to teach you how to know what these levels are, and once you know these levels, it's just a matter for you using these levels to take trades off of. In other words, you have a strategy. Let's say you have a strategy A, and you're going to say, okay, I'm going to use my strategy A every time the internals are at these specific levels that they've taught me through the internal report, the market internal report. So those are the two things we want you to get from our market internal report. And once you get that, and by the way, this report is not just for TradeStation users. If you're using another trading platform, you can use this report. It's not limited to TradeStation users. So once you get the report with the information that's in the report and you understand it, and it's quite simple, then you begin to use those two pieces of information, what the directional bias is and where to look for high probability trades that are going to occur, and that this is the most important part, that's going to create significant major swing points, because once you trade those, you're going to not only have high probability trades, but you're going to capture big moves. In other words, you're going to be participating in trades that have a huge or a substantial magnitude of profits, and that's the key. So when we look at these charts, you're going to see ovals with yellow borders or ovals with red borders. I want to go through some charts and show you how the information we extracted from market internals helps us in our trading. The morning of this day, we opened up and immediately we had an opinion that there is a bearish directional bias. But that was an opinion. We needed to wait a little bit for the market to confirm our opinion, and then once it was confirmed, we started to use our strategies, okay, to look for short trades. Now you can use our strategies or you can use your own. Depends if you have good strategies and use your own, or your own indicators, or use our indicators. It's up to you. We use our strategy. We knew that the directional bias was down. We looked for a short trade. We also looked at the levels on the internals, and this trade formed right on one of the levels that we said that causes major swing points, and our strategy confirmed the trade. We took the trade, and then down here we noticed another shift in the market internals. It was confirmed a little bit further, and this was using our strategy again. This was the trade signal. So as you can see, these would be where market internals are telling you a shift is going to take place. In other words, the directional bias is going to change. So once you have this, not only is it great for your short entry because you can exit your position here, but you could also initiate a new trade. So as we look forward in these charts, you're going to see basically where we saw shifts could take place. So we knew why the market turned here, where most people are saying, well, why did it turn here? Oh, it was yesterday's pivot. But the next day it's not yesterday's pivot, it's something else. The next day it's all about the internals. Once you understand the internals, then the markets make sense to you. Short trade, and here's where we got the shift uncovered. Here's a trend day. One of the things we teach you with market internals is how to accurately see trend days every time, no exceptions. And here again we had the opinion. On this trend day we weren't able to confirm the opinion until around this area. Okay, right around this area here. We normally like to get the confirmation a little earlier, but it's just that's the way this particular day worked out. And on trend day, our strategy is to look for the first pullback, buy it once we confirm it's a trend day, and just sit on that trade, because there's nothing else you need to do in a trend day. You just need to buy and hold till the end of the day and then exit your position. Here's a day we knew we didn't need to confirm anything. We knew right off the bat the directional bias based on what we saw in the internals was down. The problem was our strategy didn't give us an entry here, but we did get it here, and we wrote it all the way down till we got another shift here. These were two other places that we added to our trade based on our strategy. Again, here's a shift. When we capture this much out of the market range, and the market expands its range that much, this is more than a normal day, we don't bother trading anymore. But you could have gone long afterwards too if you wanted to, once you got that confirmation of the shift. And again, we got an opinion. The opinion was confirmed from the market internals. We looked, our strategy gave us short signals here and here, and at this point what we did was we received another opinion. It was confirmed. We exited our short in this area and we took long trades. And it's as simple as that. And this is what market internals does for us. And that's the whole point of the market internal report, is to teach you to be able to see these shifts so you understand that these are not random behaviors that create these shifts. It's a matter of understanding market internals.